Hello out there, dividend growth stock investors. It's Colby, the DGI Crab, wishing you a happy Saturday. So I'm back with another episode of the Great ETF Race. Took a little time away from this one, but never fear, I have continued to invest in the great ETFs. So what am I talking about here? If you are new, I started this up a while back and I wanted to prove to investors that it doesn't take a lot of time, a lot of knowledge, anything like that, any research in order to invest in the markets and gradually build yourself up a nice stream of passive income. Simply select just two, three, maybe even eight dividend themed ETFs, and you just set it and forget it, automate the whole thing, and just check in on it every once in a while, and you can be a hands off investor that really piles up some nice passive income for yourself. So what I did was I took 8 of the most popular dividend-focused ETFs out there, pitted them against each other, and I invest $5 a week every single Monday or the first trading day of the week into each of these 8 ETFs, and I keep track to see which ones are doing the best. Now that we've gotten into March, we're getting into ex-dividend date territory for ETFs. The vast majority of dividend ETFs out there are going to pay you out quarterly on the third month of each quarter, meaning March, June, September, and December. And that is exactly what 7 out of these 8 ETFs are going to do. So let's take a look at where we are at in the standings with the ETFs. So the last episode, episode 14, I had $150 invested into each of the 8 ETFs. It's been a few weeks now. Like I said, I took a little time away from the series, but in that time, I have gotten that invested capital up to $180 into each of the 8 ETFs. If you'll go back and look at episode 14, and I do have a playlist of these here on the channel, so you could easily go back and watch them and see how they've progressed over time. I have, we would have seen VYMI, the Vanguard International High Dividend ETF, was all the way down at the bottom of the list in terms of overall value. And now here we are 5-6 weeks later, and it is in the number 1 position. So interestingly enough, international investments, at least for right now, are doing really well compared to U.S. counterparts. The stock market has been a bit sluggish over the past few weeks. We've lost, I believe, like 3% off of the S&P 500 last week. I think the U.S. stock market was due for a correction. 2024 was a really hot year in the stock market. S&P 500 was up in the mid 20% over the course of the year. So I'm not particularly surprised that we have seen a little bit of a correction. Maybe we'll see a little bit more of one as time goes on. Hard to say, but the nice thing about dollar cost averaging into ETFs is you're not worried about the macros, so to speak. You're not worried if the market is up, down, sideways. You're just automating the whole thing and knowing that over the long haul, you are going to get wealthy simply by being consistent and adding money each and every week or every 2 weeks, whatever frequency you invest. And what we've got here in our group of 8 here, and you can see we've got VYMI, DHS. This is the one monthly payer out of the 8 ETFs. So I have received a dividend for the month of January and February out of DHS. And then VYM, SCHD, 2 very popular higher yielding ETFs, DGRO, SPYD, VIG, and VBR. So we've got a nice collection here of different ETFs that have differing strategies. With VBR, you'll have small caps. The small caps are actually down at the bottom of the list right now by a pretty fair margin. You can see here the overall gain. I have, they're all in the green at this point in time, except for VBR, which is the only one that's trading in the negative for me right now. VBR at times over the past few months has been in the number 1 position. So kind of interesting to see how the market has swung around a little bit, and how all of these are valued. But I'm really surprised with how high up there VYMI is. Now, if you look here at VYMI, if we look at the dividends tab, this is the amount of dividends that I've collected in this portfolio thus far. VYMI has paid me the most in dividends to date at $2.31, which makes sense. It is the highest yielding of all 8 of the ETFs, so not a huge surprise there. However, it's only a 12-cent difference between that and DHS, which is in the number 2 position in value. So that 12-cent difference really doesn't make a whole lot of difference. BYMI would still be in the number 1 position if it and DHS had paid out an exact equal amount of dividends. They were both at 219 or they were both at 231. It wouldn't have been enough to bridge the gap. VYM, SCHD, DGRO, all right up next to each other. There's just a 2-cent difference in value between VYM and SCHD. These two are pretty popular to debate as to which one is better. They both offer good solid starting yield. SCHD has been a better performer in terms of the dividend payout and the dividend growth. VYM, however, over the last couple of years has done a much better job in share price appreciation, whereas SCHD's been a bit more stagnant. So a lot to love about both of those ETFs. VYM 500 plus holdings, SCHD keeps it at about 100. So very different strategies. Both have very low expense ratios, and I really don't think you can go wrong with either one of them. So if you wanted a couple of ETFs that are going to pay you out a decent starting yield, give you some price appreciation, give you consistent dividend growth, VYM and SCHD are a very nice pairing if you were of a mind to do so. And I always like to point out on this series that you want to take time to celebrate small milestones, small victories. Because if you're thinking about the goals 10, 20, 30 years down the line, where you're hoping that a portfolio like this might eventually generate you enough dividend income that you could retire off of, or at least give you enough income to take a lot of pressure off of you, maybe something that's going to end up yielding you on average $800 or $1,000 a month. I mean, that could be a really nice supplement to your income, especially in your older years. When you're just starting out and you're in that first year, just like with this portfolio, this one is just in its first year, $40 a week in totals going in. You've got to just take a step back and just to allow yourself some grace and to not get impatient that you're not seeing those huge results and getting into really high yield trash that is unsustainable over the long haul. So a couple of sort of minor victories here that to point out here. Let's see, any good round numbers that have been hit up to this point. I wouldn't say that there's a lot of round numbers to hit here, but a couple of things that I am kind of looking forward to is VIG and VBR, due to their higher price per share, are the only 2 ETFs left that I don't have a full share of. Number of shares is fairly irrelevant, but it's kind of a fun thing to keep track of as you're going week to week through something like this. Also, on the annual income front, I am closing in on $50 a year in annual dividend income, which is a nice little milestone to hit, that first $50. The second $50 will be a little bit easier to hit because I'll get more dividends reinvested, hopefully some dividend increases along the way in the payouts as well. So far, this portfolio has only paid me out $12.86 worth of dividends. The overall portfolio value is up $45. So the dividends have certainly helped with that, but the overall growth has been really nice as well. And as dividends get reinvested, and they are, and the longer this goes, the higher the dividend payments are going to be. My yield on cost is going to start trickling up also. Because typically I'm getting around a 3% yield or a little bit better cumulatively when I add my $5 to each of these overall. You've got lower yielding ones like VIG and VBR versus some higher yielding ones like SPYD, VYMI, DHS, SEHD. It usually averages out to about $3. So when I put the $40 in there, just what that means is I'm adding about a $1.20, $1.25 or so to my forward annual income each and every week. But I'll eventually get to the point where the dividend increases and the dividend reinvestment really starts to help juice that overall number as well. That passive income stream coming in and snowballing on itself. And the yield on cost is going to actually go up because I'm just factoring in here the overall annual income versus the amount of active dollars that I've invested into the account. So that being said, every quarter when those dividends go through, the yield on cost is going to go up a bit. So what I'm hoping for is by the end of the calendar year here in 2025, my yield on cost is going to be up above 3.5%. Not 100% sure that I'll get there, but thus far, the dividend payouts that I've received up to this point have been pretty low as I've started to build this up. But the higher and higher and higher this invested number gets, the greater those payouts are going to be. So it's all about patience and not trying to time the market if you invest in this way. And again, this is a perfect style of strategy for somebody that wants to be fairly hands off. My wife is very similar. She's not the least bit interested in investing in individual stocks or researching the different ETFs that are out there and their individual strategies. For her investing, retirement accounts, etc., it's all just set up and automated into a couple of different ETFs. She never even looks at that account, but maybe once or twice a year. And that's usually just be encouraging her to take a look at it so she can see what her progress is. She doesn't even really like to do that. So a lot of people like to invest in that manner, just hands off, and there's nothing wrong with it whatsoever. ETFs give you that diversification, and it's so much better than not investing anything at all. If you're not investing, it's going to be hard to get ahead as you move along through your working lifetime, and your retirement certainly will not look particularly good if you aren't investing in retirement accounts and non-retirement accounts. So keep at it, everybody. Be patient. This is a get rich, slow, steady, but all but guaranteed. That's what I'm trying to do here. Every dollar helps. Go ahead and get yourself set up with an automated investing strategy today. You can click in the links below. I have referral links to Robinhood and to SoFi. I'm using the SoFi platform for the great ETF race. I really love both of those. If you don't have a brokerage at either one of those, you want to support the channel and get something started up for yourself, go ahead and hit those links. You can get some free money, some free stocks, whatever the case is, whichever one that you pick. And that can maybe give you a little bit of extra incentive to get you started out. And finally, I would just like to ask everyone to like the video, subscribe if you aren't subscribed already. Got a lot of playlists on the channel, so you can go back and look at the great ETF race or the weekly stocks that I'm buying series, questions from the audience. You can email me questions at dgicrab@yahoo.com. My favorite content to produce is directly responding with a video to a viewer question. So keep those coming in, you guys. And until next time, this is Colby, the DGI Crab.